Well, hey, y'all. Okay, they let me know about the moderator abilities. But we need to talk about what's happening here in these economic streets. Listen, I'm the Black Girl Magic Master. Yes, the Brother Bay on TikTok. And I like to peruse the financial headlines of the day so I can see what's really going on in this world, okay? Because if you really want to know what's happening, follow the money. So let's get into it as I drink my Tiger Wood, y'all, or Arnold Palmer for some of those. But this is my iced tea and lemonade concoction that I must have daily. But anyway, let's talk about what's going on in these financial streets. Hey, y'all, hey. Oh, I do cuss like my favorite reader says. And if you don't like my cussing, be ready to go on and leave. I won't take offense to it, but I'm going to keep it way real. Okay? And sometimes I do cuss. I mean, it just come out. It's just my passion. Anyway, let's see what's going on in these economic streets here. I like to see what's going on with the retirement community because the retirement community they keep it all the way real. So we're gonna go through what Barron's Daily has to say. What you got to talk about today, Barron's? Like I said, Barron's Daily is a retirement community type of newsletter, and they care. They care about the future of money just as much as I do because I am definitely yeah, yeah. We're not even gonna talk about my age. But anyway, according to this article in Barron's Daily newsletter, Trump's EU trade deal is a big win. Oh, you don't say it. For who? Stock markets still face these risks, though. Oh, the little caveat they done added into this little article. But let's see what Barron's Daily is reporting today. Okay. Anyway, according to this article in Barron's Daily, the retirement newsletter, it says, "Better the devil you know" seems to be the current market motto. Oh my God. Better the devil you know. This is going to be a long, little. Actually, no, this is going to be 30 minutes. 30 minutes. Do you know we only got 30 minutes? Anyway, but according to this article in Barron's Daily, President Donald Trump, his trade deal with the European Union will relieve some of the uncertainty about the global economy. Says who? Okay, but there are more hazards to negotiate in a big week for investors, according to this article in Barron's Daily. It says that the EU deal cements 15% as the baseline tariff for imported goods to the U.S. Broadly, the same agreement they done made with Japan, according to this article in Barron's Daily. Now, the article goes on further to say that leaves China as the big trade question to be resolved with talks taking place between Beijing and Washington officials this week. A grand bargain could be coming. Oh, yeah, right. Anyway, so according to this article in Barron's Daily, a clear road ahead for the market rally? Not quite. See, tariffs still act as a tax. You heard it. A tax on consumers, at least according to classical economic theory, okay? Because this is what we're going to do. The classical economic theory, because all the other shit done went out the window, okay? Under this administration. Anyway, basically, Barron goes on to say that tariffs are still acting as a tax on consumers, and setting the rate is one thing, and dealing with the results is a motherfucking other. And I'm paraphrasing. Barron didn't say motherfucker, but it says setting the rate is one thing and dealing with the results is another, according to this article in Barron's Daily. Now, the article goes on further to say that ensuring tariffs don't cause an inflationary spiral. That's what we're hoping. That is the Federal Reserve job, but the central bank's meeting this week is unlikely to clear up anything, okay? So this whole little EU deal was meant to ensure that tariffs don't cause an inflationary spiral, with the Federal Reserve. But like we said, like this article says, the central bank's meeting this week is unlikely to clear up this mess or clear up anything about the inflationary Federal Reserve. Man, listen, it's odds that rates will remain unchanged and attention will turn to inflation and job data. So this data is due Thursday and Friday, respectively, according to this article in Barron's Daily. Now, with the payroll report coming out or landing on the same day as your boy Trump's August 1st deadline for trade deals, to be done before higher tariffs kick in. There is a chance of a shock at the end of the week, according to this article in Barron's Daily. Before then, though, earnings reports will provide a window into the economy. Now, big tech will grab the headlines with Microsoft, Meta, Amazon, and Apple all updating their performance reports or their earnings reports this week. But it's worth watching what the likes of, consumer good manufacturers like Procter and Gamble and payment processor Visa have to say about import taxes, okay? And whether they're affecting household spending. And they are. I am paraphrasing. But according to this article, it says that big tech will grab the headlines with Microsoft, Meta, Amazon, and Apple all updating, but it's worth watching what the likes of consumer goods manufacturer Procter and Gamble and the payments processor Visa say about import taxes and whether they are affecting household spending, okay? Now, according to this article, since the lows of April's stocks have been rebounding in a bet that these tariffs won't be as bad as we feared, okay? According to this article on Barron's, now the market finally knows what devils it's dealing with. It just needs to figure out how to basically handle the consequences, according to this article in Barron's Daily, written by Adam Clark. Anyway, moving right along, it says that a flood of economic data is coming as the Federal Reserve decides on rates. We were just touching on this in the previous article. But Barron's Daily goes on to say that it's the busiest week in recent memory for economic news, featuring the Federal Reserve's latest interest rate policy meeting. See, the release of monthly jobs data for June and Trump's August 1st tariff deadline. Now, according to this article in Barron's Daily, while the Fed is not expected to budge on rates, two Fed governors are expected to basically dissent. Okay. According to this article in Barron's, a rate cut is more likely to happen in September. Future markets put a 62% probability on a quarter point cut. Then, according to CME's Fed Watch tools, okay, this is what they're saying, but there's about a 64% probability of at least a second quarter point drop by December. This is consistent with recent projections by federal officials. According to this article in Barron's Daily, Fed officials won't have the July jobs reports before they announce their rate decision on Wednesday. So good luck with that. I'm paraphrasing. Go on. Good luck with that, y'all, with these old rate cuts. Why would we do this? Anyway, moving right along. According to this article in Barron's Daily, that July jobs report comes on Friday with economists expecting 106,000 rise in non-farm payrolls, with nearly all the increase coming in the private sector. And that's lower than June's 147,000 rise, okay, of non-farm payrolls. But moving right along in this article from Barron's Daily, the July report could show that there's a drop in the unemployment rate from the most recent reading of 4.1%. And it's not because motherfuckers is hiring. This is, let me stop paraphrasing. And this is not because of an increased hiring, according to Barron's Daily, but fewer job seekers, according to a client note from 22 Research that's headed by Dennis, what's his name? DeBoucher. Dennis DeBoucher. He says, the shrinking labor supply issue is unappreciated. It said, the shrinking supply of people looking for jobs, the shrinking supply of labor, people seeking work, is unappreciated. Moving right along. A jobless rate of 4% or below could pressure markets and further complicate the Federal Reserve's decision on Wednesday. See, a low unemployment rate could obscure signs of weakness in payroll growth, okay? Listen, according to this article in Barron's Daily, J.P. Morgan's Bruce Kasman says that the political blowback could worsen, meaning that Donald Trump is going to continue to threaten Jerome Powell's job if the Federal Reserve is seen to be reluctant to respond to a slowing economy that he created. And I'm paraphrasing. Oh my God, let me read it verbatim real quick so you can hear what Barron's Daily said. But then I'm going to add my 2 cents. Barron's Daily said that J.P. Morgan's Bruce Kasman says the political blowback could worsen if the Fed is seen as reluctant to respond to a slowing economy. Now, let me add my 2 cents. This administration is known for creating problems that they want other people to solve, basically, to show his bravado. It's embarrassing. But moving right along, Barron's Daily continues to say in this article, what's next? It says, this week also features the latest estimates for our gross domestic product, our GDP, and employment costs for the second quarter. The release of June's measure of personal consumption expenditure price index, the PCE, which, it measures everything. It doesn't disclude, what nonprofit organizations do, like the GDP or whatnot. But the Treasury's latest borrowing plans will basically come out this week, according to Randall W. Forsyth. All right. Moving right along in this article of Barron's Daily, U.S. officials in Stockholm are talking trade with China after this EU deal. It says an American trade delegation led by Treasury Secretary Scott Bessent, I can't stand saying these people's names, was meeting in Stockholm today. That's past tense. Okay, what you mean was? But anyway, according to this article in Barron's Daily, an American trade delegation that's led by Treasury Secretary Scott Bessent was meeting in Stockholm today with officials after President Donald Trump announced a deal with the EU that set a 15% blanket rate on EU products imported into the United States. Now listen. According to this article in Barron's, China's trade talks are likely to linger well beyond Friday's deadline for other countries. Now, while the deadline for China was reset to August 12th, according to this article in Barron's Daily, officials are expected to extend it possibly for another 3 months, according to the South China Morning Post. Okay? Anyway, this article of Barron's Daily further goes on to say that the EU agreed to buy $750 billion worth of energy from the United States, and they agreed to invest $600 billion into the U.S. above their current investment. See, Trump announced on Sunday after the meeting with European Commission President Ursula von der Leyen all of this wonderful news for him and his little cronies or whatever. But tariffs on the European Union automobiles will be 15%. Now, Trump told reporters, according to this article in Barron's Daily, the EU rate doesn't apply the 50% tariffs the U.S. has set on imports of steel and aluminum, which are a worldwide thing. It was also not known whether the deal exempted certain products such as, wine and spirits, The 15% tariff is the same as the Japan deal, according to this article in Barron's Daily. And it says, while light on specifics, the European Union or the EU deal calms this whole transatlantic trade tensions that have been escalating for weeks, with threats to retaliation by the bloc or the BLOC on imports of U.S. products into the region. On Sunday, von der Leyen said the deal will rebalance but enable trade on both sides. Y'all read between them lines. Okay. Now, what's next, according to this article in Barron's Daily? Earlier, China talks netted deals on rare earth minerals and on NVIDIA's H2O chips. Now, whether this third round will include talks on TikTok's future in the United States, well, that's unclear. Commerce Secretary Howard Lutnick said that on Sunday. Yeah. Otherwise, Trump and Besant know exactly how they're going to play talks, he said. And I'm assuming that he is the Commerce Secretary Howard Lutnick. Now, this article was written by Liz Moyer. But moving right along in these economic streets, big tech, their earnings is on deck this week. Okay? Oh, yeah. Amid a whole bunch of AI spending. Now, y'all know I'm getting my doctorate in business administration, and this is, and I specialize in strategic digital transformation systems. So this kind of information is very interesting to me. But according to this article in Barron's Daily, it says that we need to expect more details about how much big tech is spending on artificial intelligence this week. See, it says when earnings reports from more of the Magnificent Seven hit, we gonna know. And I'm paraphrasing. Sorry. I'm back. But back to this article in Barron's Daily talking about the big tech earnings, or the Magnificent Seven will be giving us more details on all this AI spending they plan. And they're doing this even amid brewing worries about an AI bubble. You know what I'm saying? The tech giants, including Meta platforms and Microsoft, are likely to continue raising the bar of AI. Matter of fact, this article in Barron's Daily goes on to say that Microsoft and Facebook's parent Meta report on Wednesday, while Apple and Amazon.com weigh in on Thursday. And they come after last week's results from Google or Alphabet revealed they've raised expectations for their capital spending this year to 85 billion with a B as it plows investments into AI. Now, Meta CEO Mark Zuckerberg plans to spend hundreds of billions of dollars to build out a super intelligence network. Something they could talk about in their little earnings conference call. Now, according to this article in Barron's Daily, Wall Street expects Meta capital expenditures to basically reach 16.4 billion with a B in June quarter. That's double a year ago, the FactSet said, okay? Moving right along, Apple into its devices and its trailing rivals. Now, according to MarketWatch, which cited the Melius research analysts, they're encouraging the iPhone maker to take more chances. So Apple's CapEx, capital expenditures that they're willing to spend, is expected to rise to 2.6 billion from the 2.2 billion a year ago. So they're going to raise it about $3 billion. But moving right along in this article from Barron, analysts have expectations for Microsoft Azure. Now, that's how I learned how to, Microsoft Azure's cloud business, despite uncertainty. Now, UBS analyst Carl Kiersteed, he estimated around 22% of Azure's revenue would come from the AI workload, okay? So analysts expect CapEx spending, or capital expenditure spending, for the quarter to rise to 17.8 billion. And that's up from 13.9 billion a year ago, according to the FactSet. Now, what's next? Together, Microsoft, Meta, Amazon, and Alphabet are all poised to spend more than $300 billion with a B on the AI technology this year. MarketWatch is reporting this. The spending spree contrasts with trends in consumer spending, though, according to this article in Barron's, which has been slowed by inflation-weary shoppers and possible tariff costs, okay, according to this article in Barron's Daily. And that's what Liz Moyer is reporting. But, okay, not to be outdone, Elon Musk's and Tesla's $30 trillion supersonic tsunami is what we're going to talk about next, according to this article in Barron's Daily, because Tesla's CEO, Elon Musk, has some lofty aspirations for his fledgling humanoid robot business, projecting a $30 trillion with a T revenue opportunity over this weekend. See, that's based on his view that Tesla could make 1 billion robots a year and then sell them for $30,000 each. Though he admits that it'll be a while before that happens, but Musk made these comments during a virtual appearance at the Tesla Owners of Silicon Valley 2025 takeover party in San Mateo, California. See, this group is essentially a fan club and community for Tesla, and basically they're Musk enthusiasts. Its takeover events draw attendees from all over the world, okay, according to organizers. But according to this article in Barron's Daily, Tesla is using its artificial intelligence and manufacturing capabilities to build Optimus humanoid robots. So Tesla plans to make a few hundred by the end of 2025. Now, originally, Tesla planned to have a few thousand, but a new design slowed things down. Him and his new designs. SpaceX. Can we learn anything from SpaceX, Elon? And I'm paraphrasing. But anyway, this article goes on to say, It still plans for higher production in 2026. This whole little Optimus humanoid robot rollout. But anyway, your boy Elon goes on further to say in this article of Barron's Daily, robots are probably the world's biggest product. Musk says there's a market for 20 billion robots, he added. Hypothetically, if Tesla made 1 billion of them at $30,000, I'm just guessing here that's 30 trillion in revenue, he added. There's a long way to go between here and making 1 billion robots a year. You think, Elon. But this article in Barron Daily goes on further to say there isn't a significant market for humanoid robots yet. NVIDIA CEO Jensen Huang has said that robots can become the world's largest market. How consumer electronics and cars are 3 of the largest markets today. Anyway, what's next? Well, the Futurum chief market strategist Shay Bolur says the world spends about 50 trillion with a T dollars on humans to work or human labor a year currently, and that useful robots are pretty disruptive if you can conquer it. So Musk describes this advancement of AI technology as a supersonic tsunami. That's according to an article written by Al Root in the Barron's Daily Report. And finally, Disney's Fantastic Four rockets to 118 million with an M debut. So the latest Marvel movie, according to this article in Barron's Daily, Fantastic Four First Steps, rocketed to $118 million first place debut in domestic theaters this weekend. Combined with overseas box office sales, the superhero flick took in $218 million globally, according to ComScore. Okay, now it says that Marvel Studios is owned by Walt Disney, whose shareholders have been stuck in a lost decade. Yeah, because the stock trades close to where it did 10 years ago. So their stock hasn't been doing very well. But according to this article in Barron's Daily, Wall Street is bullish. More than 3/4 of analysts are covering the shares recommended buying them, okay? Other movies, according to this article in Barron's Daily, are also doing well this summer. Superman, the latest from Warner Brothers, notched another 24.8 million with an M in domestic ticket sales in its third weekend, coming in second behind the Marvel film Fantastic Four First Steps. Now, the latest Superman has brought in a cumulative 289.5 million in ticket sales. So far this year, Hollywood's domestic box office sales are basically outpacing what they did the same time a year ago, which is up 12% to nearly $5.2 billion, according to ComScore. And the article, Barron's Daily, further goes on to say that the lesson is that if you build great movies, audience will head to the multiplex. And that's what's basically happening over the final weekend of July, said ComScore's senior media analyst Paul Dergarabedian. Let me say his name. Paul Dergarabedian. Yep, that's his name. Dergarabedian. Paul Dergarabedian is the senior media analyst for ComScore. And basically, he said the lesson is if you build great movies, audiences will head to the multiplex. Now, to borrow from a wonderful movie called The Field of Dreams, if you build it, they will come. And I'm paraphrasing and adding that. But 3 other summer blockbusters, Comcast owned Universal's Jurassic World, Rebirth, Warner Brothers F1, the movie, and Paramount Smurf rounded out the top five this last weekend. So, moving right along, this August calendar includes the premiere of Universal's The Bad Guys 2, Paramount's The Naked Gun, Warner Brothers Weapons, and Disney's Freakier Friday, among other films. Now, what's next? The Garabedian said he had confidence the industry would cross the $4 billion domestic summer box office threshold, which has only been reached one other time since 2020. That was the Barbenheimer summer of 2023 when Barbie and Oppenheimer drove up sales, according to this article written by Liz Moyer. Yo, I enjoyed perusing these economic streets, referring from or borrowing from the articles in Barron's Daily Retirement Newsletter. I like that. It's been 31 minutes. Longer than what I anticipated, but I did have a small little break, and so don't be playing with my little video. I did have some a little interruption, but come right back. But anyway, y'all, love, peace, and hair grease, and we're gonna talk about what's happening in these economic streets, possibly tomorrow, but if not, we'll get it in on Wednesday. But we're gonna do this a lot more often. All right, all right. Well, now that I know how to actually stop this post, other than when I did it for the first time, y'all, love, peace, and hair grease. Thanks for tuning in.